Let me ask you something most traders are too proud to admit. Have you ever broken your own rules, over-leveraged your account, skipped your stop loss, chased a trade you knew was already too late, and still made money? And in that exact moment, it felt incredible. Like you were built differently. Like the market was speaking directly to you. Like discipline was something other traders needed, not you. I know that feeling. And I need you to understand something right now, before we go any further. That win was not a win. It felt like one. It looked like one. Your account balance said it was one. But what actually happened in that moment was far more costly than any loss you've ever taken. Because that trade didn't just add money to your account. It added a dangerous belief to your mindset. A belief that rules are optional. That risk management is negotiable. That you can cut corners and still come out ahead. And here's the part that should concern you. Your brain believed it. It recorded that experience as proof that reckless behavior works. And now, every time you're in a similar situation, it's not going to warn you. It's going to encourage you. That is the trap. That is exactly what's quietly ruining trading careers every single day. And by the end of this video, you're going to see it clearly, in your own trades, in your own decisions, and you're going to know exactly what to do about it. Now here's where most trading content gets it completely wrong. Every course, every mentor, every YouTube channel tells you the same thing. Focus on your wins, track your profits, measure your success by your returns. And on the surface, that sounds reasonable. That sounds logical. But that single mindset is quietly setting you up for failure. Because here's the truth that nobody in this industry wants to say out loud. Profit is the most misleading metric in trading. You can make money on a trade and still be moving in entirely the wrong direction. You can have a green week and still be developing habits that will wipe your account clean within a month. The number in your balance tells you the outcome. It tells you absolutely nothing about the process that got you there, and the process is everything. Think about what actually happens when a reckless trade pays off. You broke a rule, maybe multiple rules, and the market rewarded you anyway. So now your brain has a record of that event. Not the rule you broke, not the risk you took, not the discipline you ignored, just the reward, just the green number. Just the feeling of being right, and from that point forward, every time you find yourself in a similar situation, your brain is not going to flag it as dangerous. It's going to flag it as familiar, as something that worked before, as something worth repeating. That is the real problem. Not the one bad trade, not the one reckless decision, but the pattern it creates inside your psychology. Silently, gradually, without you even noticing, until one day the market corrects everything at once, and you're left wondering what went wrong. The damage was never in your strategy. It was never in your setup or your entry or your timing. The damage was in what those reckless wins taught you to believe about yourself and about risk. And until you address that directly, no strategy in the world will save you from repeating the same expensive cycle. So let's get into exactly what's happening inside your brain when a reckless trade pays off. Because this is where it gets really important and really uncomfortable. Your brain at its core is a pattern recognition machine. It is constantly watching, recording, and learning from every experience you have. And here's the critical part. It learns from outcomes, not intentions. It doesn't care that you meant to follow your plan. It doesn't care that you knew the trade was reckless. All it registers is what happened at the end. And if what happened at the end was profit, it files that entire experience under one category: success. So the rule you broke? Forgotten. The risk you ignored? Irrelevant. The discipline you skipped? Didn't matter. Because the outcome was positive, and your brain wants to repeat positive outcomes. This is called the reward reversal trap. And it is not a character flaw. It is not a lack of intelligence. It is basic human psychology working directly against you in a trading environment. Here is how it builds over time. The first reckless win feels like luck. You know it probably shouldn't have worked, but it did. And you move on. The second reckless win starts to feel like instinct. Maybe you're just naturally good at reading the market. The third reckless win feels like confirmation, like proof that your gut is more reliable than your rules. And by that point, the trap has fully closed around you, because you're no longer making decisions based on your trading plan. You're making decisions based on a false pattern your brain constructed from a handful of lucky outcomes. And this is exactly why discipline keeps breaking down even for traders who genuinely understand risk management. It's not that they forgot the rules, it's that their brain, through repeated reinforcement, started treating the rules as optional, started treating reckless behavior as a legitimate edge. The strategy was never the problem. The wiring was. And until you understand how that wiring got damaged in the first place, you cannot begin to repair it. Let's make this real, because theory is one thing, but I want you to see yourself in these situations. I want you to recognize these moments from your own trading history. Picture this. You've been watching a setup develop for a while. You like it. But instead of entering your standard position size, something inside you says, go bigger. This one feels different. This one feels strong. So you over-leverage 2-3 times what your plan allows. Price moves immediately in your direction. You close the trade with more profit than you'd normally make in an entire week. And in that moment, you feel sharp. You feel capable. You feel like you finally understand how to use this market to your advantage. But here is what your brain actually just learned. That oversizing positions produces bigger rewards. That breaking your risk rules is not a mistake. It's a strategy. Now picture this one. You enter a trade and within minutes it starts moving against you. Your stop loss is sitting right there, predefined, logical, exactly where it should be. But you don't take it. You tell yourself the market just needs a little more time. Hold on. Your loss gets larger, your palms get sweaty, and then price reverses. Slowly at first, then all at once. You exit in profit. Crisis avoided. You exhale and lean back thinking your patience and conviction just saved you. But here's what your brain actually just learned. That ignoring stop losses leads to better outcomes. That holding a losing trade is smarter than cutting it cleanly. And one more. You're watching a move happen without you. Price is running, momentum is strong, and every second you wait feels like money leaving your pocket. So you chase it. You enter at an extended level, a level you would never accept under normal circumstances. And somehow price keeps climbing. You close the trade in profit and tell yourself your instincts were sharp. But here is what your brain actually just learned. That chasing price works. That emotional entries can be justified by results. 3 different situations. 3 different rule violations, 3 profitable outcomes, and 3 deeply damaging lessons stored permanently in your trading psychology. Lessons that will keep surfacing, keep influencing your decisions, and keep pulling you away from the disciplined process you know you need, until you consciously choose to unlearn them. Here's what makes this trap genuinely different from every other trading mistake you can make. Most trading errors have immediate consequences. You enter without confirmation, you lose. You ignore your risk-to-reward ratio, you lose. You trade without a plan, you lose. The feedback is fast, it's clear, and as painful as it is, it teaches you something useful in the moment. You feel the consequence, you adjust, you move forward, but the reward reversal trap doesn't work that way. And that's precisely what makes it so much more destructive than any ordinary mistake. The damage is invisible. The consequences are delayed. You break a rule and the market doesn't punish you. It pays you. You skip your stop loss and instead of losing, You win. You over-leverage, and instead of blowing your account, you double it. And because there is no immediate pain, there is no immediate lesson. Your brain receives zero signal that anything went wrong. In fact, it receives the opposite signal, that everything went right. And this is where the real danger lives. Not in one reckless trade, not in one lucky outcome, but in the accumulation. Because each time a reckless win goes unpunished, the behavior becomes slightly more normalized, slightly more automatic, slightly more embedded into the way you approach every decision at your desk. Week 1, you over-leverage once and profit. You notice it, but don't think much of it. Week 2, you do it again, this time with slightly less hesitation. Week 3, it doesn't even feel reckless anymore. It just feels like your style. And by week 4, the discipline you spent months trying to build has been quietly replaced by a set of habits you didn't even consciously choose. And then the market shifts, volatility changes. That setup that kept rewarding you stops performing, and suddenly every bad habit you normalized is being exposed at the same time you would in the same account, with real money on the line. That is when traders describe feeling blindsided. That is when accounts that looked healthy for weeks disappear in days. Not because of one catastrophic decision, but because of dozens of small, corrupted decisions that were never corrected. Because they were never punished in the moment they happened. The delay between the cause and the consequence is what makes this trap so uniquely dangerous. And it is exactly why most traders never connect the two, never realize that the blow-up they're experiencing today is the direct result of the reckless wins they celebrated weeks ago. Here is the calculation most traders never make. And once you see it, you will never look at a reckless win the same way again. You ignore your stop loss. Price reverses in your favor. You close the trade up $400 and feel satisfied, maybe even proud. You saved yourself from a loss and turned it into a profit. On the surface, that looks like a $400 gain. That is how you record it. That is how you remember it. That is the number you tell yourself when you reflect on that trading session. But here is what you never added to that calculation. The psychological cost, the behavioral cost, the long-term cost of what that single trade just installed into your decision-making process. Because that $400 win did not come alone. It came with a belief attached to it. A belief that holding past your stop loss is acceptable. That your judgment in the moment is more reliable than the plan you built with a clear head. And that belief, that one quiet, invisible belief, is now sitting inside your trading psychology, influencing every decision you make going forward. Not loudly, not obviously, just subtly, consistently in the background. And here is where the real number lives. That $400 win that felt like a gain, it may have just purchased a $4,000 loss somewhere down the road, maybe a $40,000 loss if the habit runs long enough before the market corrects it. Because the next time you're in a losing trade, your brain will remember what happened last time. It will tell you to hold. It will tell you the market will reverse again. It will give you every reason to repeat the behavior that worked before. And sometimes it will work again, which makes everything worse. Because now the belief is even stronger. Now the habit is even deeper. Now the cost attached to that original $400 win has compounded further into your future. This is the hidden cost. Nobody calculates when they celebrate a reckless win. Not the money you made today, but the money you are quietly committing to lose tomorrow. The discipline you are slowly spending down. The trust you are gradually losing in your own ability to follow a plan under pressure. Professional traders. Understand this intuitively. That is why they treat a reckless win with the same level of seriousness as a significant loss. Because they know the outcome was positive, but the process was broken. And a broken process left unaddressed will always find a way to express itself, usually at the worst possible moment in the largest possible way. The visible number in your account is never the full story. The real cost of a bad habit is always larger than it appears, and the longer it goes uncorrected, the more expensive it becomes. So now you understand the trap. You understand how it forms, how it grows, and how much it quietly costs you over time. The real question is, what do you actually do about it? Because awareness alone is not enough. Knowing you're in a trap does not automatically free you from it. You need a concrete path forward, and that is exactly what I want to give you right now. The first thing you have to do is acknowledge the problem without softening it, not partially, not with excuses attached, completely and honestly. You have to sit with your trading history and call reckless wins exactly what they are. Not good trades, not proof of instinct, not confirmation of skill. Harmful patterns disguised as positive outcomes. This step feels uncomfortable because it requires you to reframe experiences. Your ego is already filed under success. But you cannot correct a pattern you are still defending. And as long as you continue justifying reckless wins, your brain will continue repeating the behaviors that produce them. The second thing you need to do is change what you measure after every single trade. Right now, most traders measure one thing. Did I make money or did I lose money? And that single metric is keeping them stuck. Starting today, the question you ask after every trade is this: did I follow my plan? Not did I profit, not did the market move in my direction. Did I execute according to the rules I set for myself before I entered? A trade where you followed every rule and took a loss is a good trade. A trade where you broke every rule and made a profit is a bad trade. Journal this distinction consistently, every session, without exception. Because the moment you start measuring behavior over outcome, your brain begins receiving accurate feedback for the first time. And accurate feedback is what produces genuine improvement. The third thing, and this one requires a real shift in how you think about trading, is to stop chasing the feeling. If you are entering trades because they excite you, because the potential return gives you a rush, because holding through volatility makes you feel alive, you are not trading. You are using the market to satisfy an emotional need, and the market will charge you heavily for that service. Real trading is deliberate. It is patient. It is, by design, unremarkable in the moment. You wait for your setup. You enter at your level. You manage your risk precisely. You exit according to your plan. There is no drama in that process, no adrenaline, no stories to tell afterward, and that absence of excitement is not a sign that you are missing something. It is a sign that you are finally doing it correctly. These 3 steps will not fix everything overnight, but applied consistently, they will begin to reverse the wiring that reckless wins created. They will rebuild the foundation your trading career actually needs to stand on. And this is where everything we have covered starts to come together. Because the steps I just walked you through, they are not just techniques. They are not just habits to add to your routine. They represent a fundamental shift in how you see yourself as a trader. And that shift, when it genuinely takes hold, changes everything. Right now, most traders operate from a results-based identity. They feel like a good trader when they make money. They feel like a failure when they lose. Their confidence rises and falls with their balance. And because of that, every decision they make is unconsciously driven by the need to produce a winning outcome, not the need to execute a correct process. That need to win at all costs is exactly what makes reckless behavior feel justified in the moment. Because if the outcome is all that matters, then any path that leads to a profitable outcome feels acceptable. The mindset shift is this: you have to move from a results-based identity to a process-based identity. You have to reach a point where you define yourself not by what your account made this week, but by how precisely you followed your plan. Where a losing trade executed correctly feels more satisfying than a winning trade built on a broken process. Where discipline itself becomes the goal, and profit becomes the natural byproduct of pursuing that goal consistently over time. And here is what changes when that shift actually happens. The emotional swings level out. You stop feeling euphoric after big wins and devastated after losses, because your sense of self is no longer attached to those outcomes. You start making clearer decisions under pressure, because you are no longer trying to force a result, you are simply trying to execute a process. And perhaps most importantly, you stop being vulnerable to the reward reversal trap, because a reckless win no longer feels like something to celebrate. It feels like a deviation from the standard you have set for yourself, something to correct, not repeat. This is the internal state that separates traders who last in this industry from those who keep cycling through accounts and strategies looking for something that will finally work. It was never about finding the right strategy. It was always about becoming the kind of trader who can execute any solid strategy with consistency and emotional stability. That transformation does not happen from one video. It does not happen from one good trading session. It builds gradually through deliberate practice, honest self-assessment, and a genuine commitment to valuing process over outcome. Even when the outcome is tempting you to do otherwise. But it does happen. And when it does, trading stops feeling like a constant battle against yourself. It starts feeling like something you are genuinely in control of. Not because the market became easier, but because you finally stopped working against your own best interests. So here is where I want to leave you, not with more information, not with another concept to think about, but with a single moment of honest self-reflection that has the potential to change the entire direction of your trading career, if you let it. The next time you break one of your rules and still walk away with a profit, I want you to stop completely. Do not open another position. Do not scroll to the next setup. Do not let that feeling of satisfaction carry you forward into the next decision. Just stop. Sit with what just happened, and ask yourself one question with complete honesty. Did I trade well, or did I get lucky? Not what does my balance say. Not what would I tell someone else about that trade. What do I actually know deep down about the quality of that decision? Because you always know. Traders always know. In the moment you break a rule, there is a part of you that registers it. A part of you that understands the process was wrong even while the outcome looks right. And that part of you is the most important voice in your trading career. Because it is the only one telling you the truth. The challenge is choosing to listen to it. Especially when every other signal, your balance, your emotions, your ego, is telling you to celebrate and move on, because here is what is at stake. Every time you dismiss that voice and celebrate a reckless win, you make it slightly quieter, slightly easier to ignore the next time, and the time after that. Until eventually it stops showing up altogether. Until the internal alarm that was designed to protect your discipline and your capital has been silenced completely by a pattern of rewarded bad decisions. And at that point, you are not just in the reward reversal trap. You are the reward reversal trap. Every trade you take is being filtered through a psychology that has been systematically trained to treat reckless behavior as normal, to treat rule breaking as instinct, to treat gambling as trading. And no strategy, no mentor, no course can help you from that position, because the problem is no longer in your approach. It is in the foundation beneath it. But that does not have to be your outcome. That voice is still there. That awareness is still accessible. The fact that you have watched this far tells me that the part of you that wants to trade with genuine discipline, with real consistency, with a process you can trust, is still present and still fighting for your attention. Honor that part. Give it the respect it deserves, because your trading career is not built in the moments when everything goes right. It is built in the moments when everything is tempting you to go wrong. And you choose your process anyway. That is the challenge. That is the standard, and that is exactly what this channel is here to help you meet every single week. If you made it to the end of this video, I want you to know something. You are already ahead of the majority of traders out there. Not because you found a better strategy, not because you discovered a secret entry technique, but because you chose to look honestly at the part of trading that most people spend their entire careers avoiding, their own psychology. And that decision matters more than you realize right now. Everything we covered today, the reward reversal trap, the hidden cost of reckless wins, the mindset shift from results to process. None of it works as a one-time lesson. It works as a daily commitment. A choice you make every single session to value your process over your outcome, your discipline over your impulse, your long-term career over a short-term feeling. That is the standard this channel is built around, not flashy setups, not overnight. Results. Just the honest, unglamorous, deeply effective work of becoming a trader who is genuinely consistent. Because their psychology is finally working with them instead of against them. If that is the trader you are committed to becoming, subscribe now and turn on notifications, because the next video is going directly deeper into this. How to actively rebuild your trading psychology after the reward reversal trap has already taken hold. Because for most of us, the rewiring has already begun, and the sooner we address it, the less it costs us going forward. The market will always be there. The question is whether you will show up to it as a disciplined trader or as an easy target. That choice starts right here.